Good morning, everyone. Welcome to the final tutorial class. Are you okay? All good? Okay. So, the accounting for partnership, this chapter will try to solve some of the questions that will be good practice for the exam as well. And there will be a question from this chapter, as I said before, and also in the revision class after the tutorial, we'll be going through the format of the exam and the types of questions that we might expect in the exam. Okay. So, any question? Yes. You don't listen? You don't listen anything? Sound? You want me to increase the volume?
Small sound, yeah.
Is that better? Still good? It's good? Okay. So, we'll start with just some basic question. Characteristics of partnership. Any idea? List 5 advantages of a partnership over a proprietorship in a company. 5 advantages of a partnership. Maybe not 5, at least give few. What are the advantages of partnership? Yes? Very good. We can write this is a problem. One, of course, would be capital. Capital. Anything else? Capital will be more. If you are doing a business by yourself, then of course you can't have that much capital, but if you can bring friends with you, will be probably a better. What else? Second is, this is skill. Okay. If you have a partner who is very skilled in the business that we are running, that would be very good for the business as well. Okay, you have a skilled partner who can advise you and who can guide you in the success of the business. Okay, any disadvantages of a partnership compared with a proprietorship and a company? And of course, compared to the company, it is easy formation. You don't need a lot of documents to form a partnership business. It's just like your own business. You just get together a few friends and then apply and just make a contract by yourself. That is going to be your partnership business. Disadvantages, of course, could be it has an unlimited liability. Liability. Okay. Anything else? Conflicts. Very good. Conflicts among partners. Conflicts among partners could be one of the problems. Some might be not trustworthy as we expect. So anyway, something like this we can write more on this. Okay, let's do this one. Nan Ferdinand has been operating a student apartment locator service as a proprietorship. She and Misty Morris have decided to form a partnership. Ferdinand's investment consists of cash, $6,000, accounts receivable $13,000, office furniture $15,000, building of $51,000, and a loan payable to the bank is $22,000. Is that okay? To determine Nan's equity in the partnership, she and Misty hire an independent valuer. He values all the assets and liabilities at the carrying amount except the building, which has a current market value of $96,000. Also, there are additional accounts payable of $5,000 that Nan will contribute. Misty will contribute cash equal to Nan's equity in the partnership. So, first of all, the one who is running business is Nan, and he's trying to get a partner. The name of this partner is what? Misty, right? So, what about the capital the Nan is having? They say that Misty will contribute the equal amount of that asset as a cash. but I need to know how much actually the NAN is contributing in the partnership. Can you try to calculate the amount that NAN is bringing as a capital in the business? Look at the asset, liability, and then find the equity that she is bringing. Anyway, let's think about this. It's important. Nan already have a business, right? Already has a business, and he has some asset, and he also has some liability. So, but he is bringing a new partner, and the new partner is telling that, okay, I will contribute exactly whatever amount of money or contribution that you have in the business right now. So I need to know exactly how much Nan has a capital in this business. Asset minus liability. Okay, find the asset minus liability. So to find Nan's equity, we just need to find the amount of asset and then deduct the liabilities. In case of asset, there is the building, right? Whatever the building have a value right now, it is 51,000, right? But whenever we are forming a new partnership business, the independent assessor is telling that this building should be $96,000. Which one we should take? We should take $96,000. And loan payable to the bank is already there, but they reveal that there is additional accounts payable of $5,000. So include this as a liability. Yeah, we wait for others. Let's see. I don't have the answer, so we can wait. Can anyone else give me the answer? Add all the asset, deduct liabilities. Then we'll be able to find. $1,03,000. Anyone else? How much you got? So it's going to be 6,000 plus 13,000 plus 15,000 plus 96,000 minus 22,000 minus 5,000. Is that correct? 103,000? Okay, very good. Is that okay? Everyone else got the same? Excellent. So the answer is going to be $103,000. Journalize the entry to the partnership books to record Nan's investment. Can you give me the journal entry? Journal entry for this. If you can give a journal entry, you'll get 1 bonus point. The capital? You need to write. How many of you received my mail this morning? Only you? No one else? So journal entry is going to be cash debit. Okay, I give you time, another 30 seconds. Cash debit, account receivable debit, furniture debit, need to write the amount as well. Is that okay? Cash debit, account receivable debit, and then furniture debit. Yes, you need to write. It's a journal entry. So it's going to be cash debit, accounts receivable debit, furniture debit, then building debit, with the new amount $96,000, and credit is going to be accounts payable is going to be credit, then loan payable also going to be credit, and then is going to be with the name of Nance Capital is going to be what? Credit. How about journal entry for Misty's investment? What will be the journal entry for Misty's investment? This is the one that we give. Journal entry is for Nance investment. How about the Misty's investment?
That 1 lakh
is what? Cash to capital, right? Cash debit, and Misty's capital is going to be credit by $103,000. Very good. This is very important question, okay? Nan Ferdinand and Misty Morris have formed a partnership. During their first year of the operation, the partnership earned $50,000. The profit and loss sharing agreement states that the first, each partner will receive 10% of their capital balance. The second level is based on service, 10,000 and 15,000, and any remaining money will be shared between them 3:5. Calculate the amount of income each partner will receive under the profit and loss sharing agreement. Okay, very important. Let's do everyone these questions. So you can make a column like this. For example, Nan. Now you can write maybe the first condition, second condition, and third condition. Okay, look at the first condition. Can you try? Let's do this. You okay? Getting the point? So they made a profit how much?
They made a profit like
50,000. So we need to distribute the 50,000 between them, right? So the total amount of profit is 50,000, but then they have some condition, 3 conditions. The first condition is based on their capital balance. But do you know how much is the capital balance? 103,000. Okay. Yeah, maybe 103,000. Use that 103,000 capital.
10% of
103,000, yes.
10,000 and
300, yeah. Go ahead with this. Let's see. You got it? Is there anyone who didn't understand? Three is to 5.
Divide that 3 is to 5. I don't know. Like the remaining amount is 4400.
Yeah.
Yeah, and
So 3 is to 5. How to calculate 3 is to 5?
yeah. 3 by 5, 1650.
Eh?
1652.
No, how do you calculate 3 is to 5? That was my question. That's your friend's question.
10% of 1,03,000 to each one.
Okay.
And then 10,000 to net and 50,000 to district.
Okay.
And remaining 4,400. And 3, like 3x plus 5x, 8x divided by 10.
Very good. You got it? 3 plus 5, 8, right? So now, whatever remaining money is there for NAN is going to be, for example, 4,400 is remaining, right? Divided by 8, multiplied by 3. And for the other guy is going to be 5. Okay? 3 is to 5 will be calculated using this way. If it is 1 is to 2, it is going to be 1 plus 2, 3. One will get 1 by 3, another one will get 2 by 3. Is that okay? What is the balance?
The balance is 2752 Misty
Okay.
and 1652 NAN.
Okay. Let's see. We have to wait for others. Anyone else has the similar answer? So the total profit distribution is going to be, have you got this one? 21,950 and then 28,050. Is that okay? All good? Very good. Anyone else who did not get this answer in the back? Or you want me to solve it here? No? Yes? Okay. Okay, we do it here. So for example, I have two partners. One is called Nan, the other one is Misty. Okay. So they are on their business for a year, okay, and after 1 year, they got a profit is $50,000. Because they are the two in the business, we need to distribute the money to them. The first condition is saying that each partner will receive 10% of their capital balance. So their capital balance was actually, in last calculation we saw, $103,000, okay, for both of them. So is it correct? 10,300? Same? Okay. Misty will also get $10,300. Then second one is based on what? It is 10,000 and 15,000. Is that okay? Because based on their service, one will get $10,000 profit, another one will get $15,000 profit. The third is based on ratio. So now I need to know how much is remaining money. Is that okay? So how much is remaining money? We already used 10,300 plus $10,300. How much is $20,600 plus 10,000? That is 30. How much? 30,600 plus 15. 40. 45,600. How much is remaining? $4,400. So ratio is 3:5. That means NAN will get 3 part of the whole. So 4,400 divided by 8 into 3. 4,400 divided by 8 into 5. What is the amount?
That is
16, 50, and this one 2750. Then I need to show, right? Add all together and then see the balance. How do you journalize the entry? Journalize the entry to close the income summary account for the year. Do you know how to do this closing entry? Do you still remember closing entry? You all did in the assignment, right? Closing entry. I want to close the income summary, right? To close the income summary. Capital and draw, right? Capital with whom?
capital with
revenue minus expenses, that will be the total capital.
No, revenue minus expenses is profit. Is a profit, right?
assets minus liabilities.
I need the journal entry. What is the journal entry here? So we did one closing entry to cancel all the revenue, right? Another closing entry to close all the expenses. Another closing entry to close the income summary. Another closing entry for drawing. The third one, we actually transferred the profit into the capital. Do you remember? The third one. So that third one, what will be the journal entry now? Based on this, here for this calculation, income summary is going to be debit and capital of Nance is going to be credit by this amount and capital of Misty is going to be credited by the total amount. Is that okay? Do you want me to write? Okay, I write it here. Very important. So don't miss this. Income summary is going to be debit by $50,000. Nance capital is going to be credit. What is the amount of Nance capital in income statement, the one that you calculated right now? What is the capital? What is the total profit goes to Nance? Because you are very busy with someone. 21. 21. And then Misty's capital, right? Remaining amount, that is going to be 30,050. Is that correct? No. 28,050. It is going to be 28,050. Write the journal entry very accurately, okay? Okay, accounting for the admission of a new partner. Let's do this one. A bit difficult, but let's try this one. Okay. Haley Holly is admitted to the partnership of Rose and Novak. Prior to her admission, the partnership books show Greta Rose capital balance 170,000 and Chris Novak's capital balance is $85,000. Assume Rose and Novak share profits and losses equally. In the back is the last class. If you want to move here, that's good. You're fine? Calculate each partner's equity on the books of the new partnership under the following plans. Holly pays $95,000 for Novak's equity. Holly pays Novak directly. Can you try? So a new partner is coming, okay? A new partner is coming. That is Holly is admitted to the partnership of Rose and Novak. Prior to her admission, both of them has capital balance 170,000. Chris Novak has a capital balance of $85,000. Now, assume Rose and Novak shares profit equally. So the first condition is saying Holly is the one who is coming new pays Novak equity $95,000 because he has $85,000, but he is paying $95,000. Holly is paying Novak directly, means Novak is going out of the business. Okay. How much would be the capital for Holly? That's my question. Okay. Let's try to understand here. Rose, how much capital he has at this moment? $170,000. And Novak has a capital of $85,000. Now the new partner is, name is what? Holly. Holly is trying to come in this business. The first scenario is the Holly is saying, okay, I will give you $95,000, okay, and he go out from the business. This is first condition. Even though her capital contribution is $85,000, but he is happy to give him $95,000. So my question is, if I do a new balance sheet in the company or a partnership company, then we need to write capital, right? Asset, liabilities, owner's equity. In the owner's equity, I need to write both of their owner's equity. So I already know Rose is going to be $170,000. Novak is going out from the business and Hollis is coming. Hollis, my question is now, what will be the capital amount of Hollis that I have to write here? 85,000 or 9? She's paying actually 95,000. Why? Your answer is correct, but why?
Because the business is in profit, so he's paying extra to get in the business.
Yes, but this guy is going out. Business, the answer is, she is, total capital is?
Our total capital, that amount is reduced.
Our total capital of this amount is what? Is reduced? No, he's paying 95,000. And this guy is going out from the business. So the deal is basically between Novak and Hollis. Okay? It doesn't matter. He is not giving $95,000 to the business. He is paying personally to him. So I am a partner of this business, for example, Rose. I just know that there is a new partner coming. I don't know the transition between them. So whoever is coming, I will be giving his share is going to be $85,000. Is that clear? So in the balance sheet, I will be writing Hollis will get $85,000. The $10,000 extra is going to Novak only, and Novak is going out from the business. So it's between a personal transaction between them. Is that clear? So that's why I will not be recording $95,000. Now let's go. Hollis invests $85,000 to acquire 1/4 interest in the partnership. So He's paying now $85,000. What do you think? $85,000. Let's add, that means no one is going out from the business, everyone is staying business, the new partner is coming. Is that correct? So the first one, Hollis, Rose. And Novak already have $85,000. And Hollis is investing now $85,000. Can you add all together? How much? 340,000. Okay. 340,000. And the business is saying Hollis will get 1/4 of the total investment in the business, right? What is the 1/4? How much is the 1/4? How much is the 1/4 of $340,000? Do you know how to calculate, right? Divide by 4, that means it's going to be $85,000. So actually she is paying $85,000 and her capital is also $85,000 they are giving. So in the balance sheet I will be writing this way: Rose 170, Novak 85 and Hollis 85. He is getting half of the business and he is getting 1/4 of the business and he is getting 1/4 of the business. He is not paying anything extra to the business. Is that okay? Now change the condition. She is paying $105,000 but she is receiving only 1/4 of the interest of the business. Let's do this. What will be Hollis capital? 105. Anything else? Change it to 105. Okay. Change it to 105. Now add all and then divide by 4. How much? Definitely not $85,000. How much? 90,000, right? Okay. That means in the balance sheet I will be writing definitely her capital is going to be how much? 90,000. Is that correct? The problem is the total. Okay, now add this 90 plus 85 plus 170. How much is this? Can you give me the answer? 90 plus 85 plus 170. 345,000. Now how much is this one? 170, 85 and 105? 360. Okay, this one is 360. That means if it's 345, it's actually not matching my answer. My total capital has to be $360,000. But if I write Novak is 90 and if this guy is 170 and 85, my answer is coming 345, which cannot be true as well. So now my question is, where is going that $15,000 extra that I'm getting? You see my problem in the question? No. So these people will be getting additional 7,500. Now, if you add all together, it's going to be $360,000. What is the mystery here? The mystery is this Rose and Novak is running business for a long time. They have reputation. For example, the new partner who is coming, she's paying so high, $105,000, but she's happy to take a capital contribution of $90,000 only. Okay, that means she's paying how much extra? $15,000 extra, right? So that $15,000, the other two partners, they will share. They will increase their own capital. So they will divide between themselves. 7,500 and 7,500. So the new capital for Ross is going to be $177,500. For him is going to be $92,500, and he will be getting $90,000. Is that okay? Got it? Generalized admitting is okay. We know the capital already. Okay, let's see, is there anything important? This is fine. So most of the, my emphasis will be until the withdrawal of the admission to the new partner of the business, okay? So focus the questions that goes until the admission of a new partner, okay? Let's see if there is anything else important. Okay, let's do this one as well, okay, and then we'll be ending with this. The O'Hara and Parks partnership balance sheet shows capital of 55,000 of O'Hara and 110,000 for Parks. The two partners, one has $55,000, another has $110,000, exactly double. O'Hara is withdrawing from the firm. The partner agrees to write partnership non-cash asset to market value by increasing them by $40,000. Whatever the asset is right now, they will be increased by $40,000. They have shared profit and loss in the ratio of 1/4 and 3/4 to the Parks. The partnership agreement states that withdrawing partner will receive asset equal to the carrying amount of his owner's equity. Journalize the revaluation of non-cash asset. Okay, journalize the withdrawal of O'Hara. Parks will continue to operate the business as a proprietorship. Okay, that's not a problem. Revaluation of non-cash asset. How much asset right now the business has? Can you give me the answer? How much asset do they have in the business? Any idea? Okay, if you are increasing non-cash asset to the market value by increasing them by $40,000, for example, so the new asset value, whatever, is going to be increased by $40,000. And now profit and loss in the ratio is 1/4 and 3/4 to the Parks. The partnership agreement states that withdrawing partner will receive assets equal to the carrying amount of his owner's equity. Okay, how much is the owner's equity? That is the question. Can you? Owner's equity is 165 is total, right? But individually, how much they will have? Let's see. I think one information is probably missing there. That is. Capital is $55,000 and this. Okay, value increase of 40,000, right? And that is going to be distributed by what ratio? 1:3, right? So that is $10,000 and $30,000. So the new capital is going to be basically $65,000 and $140,000. O'Hara is going out from the business. How much money he will be receiving? He's going to receive $65,000. Simple. Because they say that the amount of money that a partner will be taking, the amount his capital, same amount of his capital, $65,000. Novak will be alone, he will be running the business by $140,000 with him. Okay. Okay, any question for this? Partnership mainly will be focused on distribution of profit and losses, and then admission of new partner, and slightly on withdrawing the partners. Okay, so we'll be focusing on only this part, not on liquidation. We don't have to go up to that level. And if no question, then we take a break for a few minutes and we'll be back at 11 o'clock. Okay, we'll have a short review class. And in the review class, we'll be giving and discussing about the exam format questions and some of the important questions. Okay.